What's going on? Welcome to Blockchain Tech and Finance News. If you're on the YouTube side, please do subscribe, turn on the bell notifications. I have some articles I'm going to be reading today that I found interesting. You can catch all these articles on the recap episodes on the YouTube side, and henceforth why I say, please do subscribe, turn on the bell notifications. I appreciate your content viewing here on Blockchain Tech and Finance News. If you're in the chat, you can chat. And I spin these articles up as best I can day to day. Not really time conducive or anything like that. So that's why I have the notifications on. Go live, you can catch it. Say what's up. And ask or chat. I'll leave your comments in the aftermath episodes. So, in this first article, I'm going to spin it up here. Go right on to our transition. Crypto Decoded. This is from CNBC. Tesla CEO Elon Musk says U.S. government should avoid regulating crypto. Tesla chief Elon Musk on Tuesday said the U.S. government should steer clear of trying to regulate the crypto market. It is not possible to think destroy crypto, but it is possible for governments to slow down its advancement, Musk said at the Code Conference in Beverly Hills, California. All right, we'll watch this little snippet video here. Let's go.
Helping your client plan for retirement seems very complex.
Well, Nationwide's easy-to-use resources cut through.
I'll read for a bit while the ad goes on. Tesla CEO Elon Musk on Tuesday said the U.S. government should steer clear of trying to regulate the crypto market. Out here, let's go.
Elon Musk, what he thinks should. Yes, Melissa, that's right. Gary Gensler was here talking about regulating crypto. Kara Swisher asked Elon Musk what he thinks should be done about regulating crypto, and he said nothing. He said that though, Kara Swisher put it as the Wild West of finance, he thinks that nothing should be done. He talked about how he's very familiar with money systems, obviously came from PayPal, but he thinks that this is an area that's better unregulated. Also weighing in on China, saying he's not particularly concerned about U.S.-China relations, saying that he thinks that the Chinese government and the way it treats entrepreneurs and the like will get better with time. That's just been damaged in part by the lack of ability to have in-person meetings during the pandemic. Also talking about space travel, saying he's glad that Bezos and Richard Branson are investing in space travel, but making it very clear that what he's doing, orbital space travel, is very different, much more complex and much more expensive, but saying he himself doesn't need to go to space. This is more about him creating an interplanetary species. Melissa?
Thank you, Julia Borston. From the Code Conference. Dan, you are there. Leave it to Elon Musk to talk about these species, intergalactic or whatnot.
Well, it's funny. If you were expecting him to be really excitable, he's not. He's pretty chill. He actually has like one of those things that guy probably wears at home around his neck, like one of those things on him. I will say he said this to Kara Swisher, who asked him the question about China. His first response, and I think he was trying to be snarky, was, where is Jack Ma? Which I think is really interesting, because then he went into this other bit. So interesting question from a CEO of a company that is one of the largest in the world.
Yeah, that's an interesting comment. Where is Jack Ma? He's just at home in a room, meditating, working on his health or something. Tesla CEO Elon Musk on Tuesday said the U.S. government should steer clear trying to regulate the crypto market. It is not possible to destroy crypto, but it is possible for governments to slow down its advancement, Musk said at the Code conference in Beverly Hills, California. Musk was responding on stage to a question from New York Times columnist Kara Swisher. She asked whether the U.S. government should be involved in regulating the crypto space. I would say do nothing, he said. Tesla said early this year that it had purchased $1.5 billion worth of Bitcoin. The value of those holdings swelled to about $2.5 billion in the second quarter. As Bitcoin prices surged, Bitcoin has since dropped along with other cryptocurrencies. Musk, who has frequently touted his support for various digital coins on Twitter, is bullish on the role of crypto in potentially reducing the error and latency on the legacy money systems. But he acknowledged that crypto doesn't have all the answers to society's ills. Let me go ahead and actually make sure, speaking of Twitter, make sure the Twitter is actually running. So I can see, bring up the chat there. So if you're chatting on Twitter, there we go. And I will just from here, I'm going to bring up the live chat on Twitter. So if you're on Twitter side, you can retweet. And chat away with each other. I'll remember to do these things prior about bringing up chats in the Twitter. There we go. So y'all can chat and I will respond accordingly, give shout outs and whatnot. I wouldn't say that I'm a massive cryptocurrency expert, said Musk. I think there is some value in cryptocurrency, but I wouldn't say it's the second coming of the Messiah. Musk on China's crypto crackdown. Musk also addressed China's role in crypto mining and regulation. Last week, China's central bank spelled out tougher measures in its wider crypto crackdown, including souped-up systems to monitor crypto-related transactions. Musk said the heavy hand likely has to do with the country's significant electricity generation issues. Part of it may actually be due to electricity shortages in many parts of China, said Musk. A lot of South China right now is having random power outages because of the power demand is higher than expected. Crypto mining might be playing a role in that, he said. At a higher level, the decentralized nature of cryptocurrencies may present a challenge for the Chinese government. I suppose cryptocurrency is fundamentally aimed at reducing power of a centralized government, Musk said. They don't like that. So, yeah, it's from Crypto Decoded from Mackenzie Zagalos, or Crypto Decoded on CNBC. So I'm going to spin up this next article up here. And yeah, iPhone Reacts repo market just hit 1.6 trillion. Repo market. Not sure what repo market is. What's repo market? Might not. Oh, whatever. I'm gonna grab up this news source. Spin up another article here. I've got a slew of articles. I'm going to actually try and read through them swiftly. And they're mainly all cryptocurrency based. Yet I have one tech piece and one stock piece as well. Sometimes I vary between blockchain pieces, tech pieces, stock pieces, and cryptocurrency in general. But it seems to be a lot of crypto news today. So, but yeah, let me know what repo market just hit 1.6 trillion. Let's go through this transition into our article. This is from CNBC, Crypto Decoded, Mackenzie Zagalos as well. And yeah, if you're on whether you're on YouTube, Facebook, Twitch, DLive TV, Trovo, or Twitter, you can chat in the chat. I can see you in the chat. Facebook side, I can't see you in the chat. You can share your crypto groups over there or whatever. A firm says crypto invest will soon be available to customers with savings accounts. A firm said customers with savings accounts will be able to buy and sell cryptocurrencies. A firm CEO, Max Levchin, said the company is working on the feature, but didn't give a time frame for its release. The payments company joins a growing list of fintech businesses breaking into the crypto space. A firm, an online lender that helped popularize the buy now, pay later business model before moving deeper into banking, just became the latest fintech company to hop on the Bitcoin bandwagon. In an investor presentation Tuesday, a firm CEO, Max Levchin, said his company is working on a feature that will let consumers buy and sell cryptocurrencies directly from their savings account. It's time for a firm to support cryptocurrencies in a way that feels organic to us, Levchin said during the 2-hour presentation. We will soon leverage our savings account to seamlessly enable crypto ownership. A firm did not provide a time frame for the release. The company included a deck with its presentation and had one slide that said new and coming soon, followed by crypto. The slide showed an image of a firm mobile app with Bitcoin holdings underneath the savings account. A firm is competing in a crowded market as online lenders, mobile investing apps, and crypto exchanges try to lure younger consumers, while the emerging fintech companies started with niche offerings. They are all trying to bring more banking and financial services to people who loathe going to physical branches and expect products to have similar user interfaces. Just this week, Coinbase rolled out a new function that allows users to get paid in Bitcoin and other cryptocurrencies by enabling direct deposit of paychecks into Coinbase accounts. PayPal, SoFi, Chime, and Robinhood each offer crypto-related services to go along with their core products. Earlier this summer, Upgrade, a provider of affordable credit to mainstream consumers, introduced a feature that lets users earn unlimited 1.5% Bitcoin rewards on every purchase using their Upgrade credit card. A firm shares rose less than 1% to $115.50 on Wednesday. The company has more than doubled in value since its IPO in January. Oh, so this was new. I can turn this up a little bit. There we go. Yeah. All right. So, firm going into crypto, building out wallets attached to savings accounts within the banking hemisphere, stratosphere, econosphere, whatever you call it. Still want to know, like, what is repo market? What is repo market? And repossessions, repossessing stuff. All right, let's spin up this next article. Yeah, check mark on yeah. All right. So yeah, on the recap on Twitch and YouTube, I will have all these article links in there. Twitch expires after a bit. I don't know about other platforms like DLive TV and other things like that, but YouTube, it stays permanently. Always. And article links that people can read through at their leisure on the recaps there on YouTube. And on Twitch after the stream, they are added in there. Let's go right into this next article. For regulating the unregulated cryptocurrency market from the Harvard Gazette, Business and Economy. So regulators put cryptocurrency in crosshairs. Business school professors offers look at landscape and challenges for industry, government. Is cryptocurrency the future of global banking and trade, or sketchy payment and investment, or a sketchy payment and investment vehicle favored by scammers and speculators, criminal organizations, and any individual or entity shut out of Western banking systems like North Korea? The jury is still out. One thing that is clear, however, is that the cryptocurrency market continues to grow as its popularity popularity has become more mainstream since 2019. Even many once skeptical institutional investors have come around after seeing some of the mind-boggling returns. In January 2019, one Bitcoin traded for 3,441. This week it hit 40, just over 43K. That success may have a price. Calls to rein in the industry are fever pitched this month. China, one of the world's largest digital currency, they outlawed Bitcoin mining, cryptocurrency exchanges. We all know this is going on. Let's see. The U.S. Securities and Exchange Commission is also pushing for greater enforcement. SEC Chairman Gary Gensler called cryptocurrency an asset class rife with fraud, scams, and abuse, and said investors don't have enough regulatory protection from swarms jumping into crypto finance, issuance, trading, and lending. And that, I agree with. I do agree with that statement, actually. Scott Dukes, commoners, 9 a.m., 10 PhD, 11 is the MBA class of 1960, associate professor of business administration at Harvard Business School and a faculty affiliate of Harvard's Department of Economics and Harvard Center of Mathematical Sciences and Application. He advises crypto businesses and projects, including Facebook's digital wallet and payment system, and holds cryptocurrency and other crypto assets. Interview has been edited for clarity and length. So the Q&A, Scott Duke, commoners from the Gazette, there are thousands of different cryptocurrencies, but no consensus on the precise number. The range is between 5,000 and 12,000, valued at about $2 trillion. What does the landscape look like today? Commoners' response, those numbers sound huge, but there are actually many more than that, because lots of crypto products are not currencies, and lots of cryptocurrencies are too small to be part of mainstream exchanges. Many crypto products are effectively just tokens. Sometimes they are representative of ownership in decentralized autonomous organizations, which are organizations that share governance rights and returns to a committee of participants by allocating them tokens. A bit like stock shares, they are project-specific tokens used in specific online games or among individual communities. There are NFTs, which are unique, non-fungible tokens that have been used as representing ownership over things like digital artworks. Tons of these are being minted daily at this point. So there is a very large landscape. The pure currency aspect of it is a huge market on its own, but in a drop in the bucket of total applications of crypto and blockchain technology today. What's the appeal for investors? Is it just eye-popping returns, or is it more? Is there more to it? So commoners' response: some people have gotten interested in cryptocurrency because of the investment returns, unquestionably, but there are also real practical infrastructure and technology benefits. You're starting to see countries willing to receive officially or recognize crypto payments, and people have been considering whether crypto technology can be used to deliver government aid. Well, I mean, the UNICEF, right, has been using blockchain technology for some time for food aid tracking. This is because when it's working, crypto is frictionless and thus creates a more efficient way of transferring and sharing value among people. And as a result, there's real opportunity to use crypto for large-scale payments as well as in things like business payment processing. Also, there's a big opportunity for enhancing financial inclusion by providing a secure payment network and cross-border transfers in places that don't otherwise have well-structured customer financial systems. So while some people are interested in this for the short or medium-term investment opportunity, I think a lot of the investment we've seen flow on the institutional and venture sides is because there are real valuable technologies that are being built on crypto backbones that can do things we never could do before in markets. Gazette questions this. The SEC chairman called this an asset class rife with fraud, scams, and abuse. Is this industry operating in a rule-free Wild West atmosphere, as he suggested? I haven't read the full Gensler remarks, so I can't comment explicitly on his overall take, but I can comment on some of the individual elements you mentioned. It's clear that the space needs more consumer protection, and we're starting to see that right now. If a hacker gains access to your crypto wallet, they can drain it and you may have no recourse. But the newer waves of wallet technologies and crypto exchanges are thinking hard about all the things consumers expect out of banking products and equities trading accounts. They're trying to create more security and protections at the consumer interface level. And then, of course, you also need regulation to prevent financial crime and scams, just like we have in other parts of the financial services industry. So some lawmakers have pointed to the GameStop stock trading frenzy in early 2021 as analogs to the crypto market, saying that most ordinary investors have gotten caught up in hype and don't fully understand the risks they're taking. I think a lot of the investment we've seen flow in on the institutional and venture sides is because there are real valuable technologies that are being built on crypto. So we already read that statement there. So first of all, it's important to note that the GameStop run wasn't in a new trading arena. It was internet hype trading of a specific stock in the regular stock market. That said, the GameStop story is in some sense analogous to the meme trading of crypto products like Dogecoin. There's consumer confusion around the idea that these assets could lose value. A lot of people lost a lot of money on the GameStop and Dogecoin run-ups and crashes. They were on a platform that made trading feel like a video game, didn't understand the real risk. And so in those ways, it's analogous. Analogous? I never even heard that word before. Consumers and investors need to understand that these are high variance speculative assets. But when you get into the technology infrastructure pieces, GameStop and crypto can look very different. Cryptocurrency trading now looks a lot like equities trading. If you have a brokerage account at an exchange or potentially on a platform like Robinhood. But for many other crypto applications, the infrastructure is very, very new and the platforms are very, very new. And they're not heavily protected. I think we'll see more regulation in around messaging and communication, but there are also more structural questions. For example, one of the regulatory conversations is around stablecoins, crypto assets that hold nominally fixed values because they're designed to just be used for moving money from one place to another in a fixed denomination. They're typically backed by reserves in a way similar to how banks back their loans with deposits, but there are questions about how to properly structure those reserves. If everyone simultaneously decided they wanted to divest, will stablecoins have the reserves to support that? I expect to see regulation around allowable assets and reserve design, just like we have with banks. And finally, we need regulation to ensure open competition among different crypto products and platforms. Besides fending off regulations, what are the industry's other challenges? One basic challenge is around taxation of crypto income. This isn't just about taxation avoidance concerns. A lot of people like to pay taxes on their crypto, but have absolutely no idea how to do so. We don't have clear crypto categories for taxation purposes, so it's extremely complicated to figure out which parts are ordinary income versus capital reserve versus capital gains, as well as when the associated income has accrued, organizing the tax treatment of all these assets, and then of course ensuring tax payment is essential. Another challenge is environmental. A lot of the most popular crypto technologies at the moment require a tremendous amount of energy to run, and so we're going to start seeing government leadership and regulation driving a shift toward versions of this technology that are more environmentally sustainable. Bitcoin and other early blockchains use a technology where you have to prove that you have solved a very hard computational problem to record transactions securely. And solving those computational problems is taking up certain amounts of energy. Newer blockchains use much less energy-intensive ways of validating transactions. And so my guess and hope is that the way we're going to get away from environmentally harmful cryptocurrency transactions is through continual improvements in the technology, alongside regulation and market forces pushing toward technologies that are much more efficient. If new regulations are on the way, what would be the best or worst case scenario for the industry? I don't think it's a question of no regulation versus a lot. The real question is the extent to which regulators understand that crypto is a different type of product and tech infrastructure from anything they've regulated before. The worst case would be to just treat it like historical financial products or like historical tech platforms without thinking about the ways in which crypto differs, both in terms of its use cases and in terms of underlying technology. So this is from the Daily Gazette. Let's see. No, money that's loaned to other banks for short term. The dollar is being looted. The repo market. Money that's loaned to other banks. Oh. Where's it loaned from? I'm just reading from a chat. So the repo market just hit 1.6 trillion, and it's from money loaned to other banks in short term. So the dollar's being looted in the chat. But who's in that statement? Who's lending the money to the banks for short term? The governments, or what's your aspect? That's my question. So I'm going to spin up this next article here. Oh. For our YouTube side, subscribe, turn on bell notifications here to blockchain, tech, and finance news. Another article right here. So Ethereum miners are hoarding a record 70 billion in Ethereum following EIP 1155 standard activation. The Ethereum block producers accumulated $1.6 billion worth of Ethereum tokens after the August 5th network upgrade. Hoarding record $70 billion. Wow. What does it say?
Ethereum miners are hoarding a record $70 billion in ETH following EIP 1559 activation. An on-chain study released by Kraken Intelligence highlighted strong...
All right, let's read the article. The Ethereum block producers accumulate... Yeah, we just said that. On-chain study released by Kraken Intelligence highlights strong accumulation behavior among Ethereum miners, even as they face the prospects of generating lower revenue following a major network upgrade on August 5th. Ethereum miners accumulated an additional 2 million Ethereum worth $6.1 billion after the so-called London hard forks activation. The latest bout of accumulation caused miners' net Ether holdings to hit an all-time high of 22.3 million Ethereum, worth nearly $70 billion, which is almost 19% of the total Ether supply. ETH accumulation was stagnant for most of the summer before picking up speed in July in spite of ETH price trending lower, the Kraken report reads. However, ETH accumulation amongst miners really took off after EIP 1155, as they likely saw the disinflationary aspects of the upgrade to drive up price. Miners snub EIP 1155 FUD. EIP 1155, which went live alongside London hard fork on August 5th, divided transaction fees chargeable via Ethereum's native token ETH into two parts, the base fee and the priority fee. The network started charging base fees to add transactions to Ethereum blocks. Meanwhile, it introduced priority fees, or voluntary tips that Ethereum users pay to miners to speed up transactions, like the gas. As it was said, set gas based on the demand of the network, and now it's more like tipping, network tipping with a base fee. London hard fork, But EIP 1155 changed the way Ethereum's token economy works by introducing a fee burning mechanism. In doing so, the improvement initiated the burning of the base fee, thereby making ETH a deflationary asset by permanently removing a part of its supply from circulation. Burning a portion of the total fee circulation also means a drop in revenue from Ethereum for Ethereum miners. As a result, EIP 1155's launch sparked warnings about lower mining profitability, with one study finding that miners' revenue dropped by 15% right after EIP 1155 went live. But that didn't deter the miners from raising their Ethereum exposure, with Ethereum's hash rate reaching a record high of 736.67 terahashes per second on September 23rd. That is despite a drop in Ethereum mining activity following China's crypto crackdown in May, which later led the hash rate to a 3-month low of 477.54. Kraken wrote. This tells us that not only was the reaction of the China crackdown exaggerated, but miners also view the latest upgrade as an overall boon for ETH that outweighed the con of its miner reward reduction. It's a new all-time high. Not sure where it comes from. Fed maybe. It's all fake. Is the problem. Banks have to have cash on hand, and there's not enough to go around. Is how I understand it. So they pay a huge percent. NFT boom. So yeah, if you're in the chat, whatever form you're on, you can chat in there, and I'll if I got time, I'll respond. NFT boom and staking sentiment behind the mining boom. Ethereum miners survived the EIP 1155 FUD primarily due to rising ETH prices and high network demand, led by a boom in the non-fungible token NFT space. Yep, I believe it. Kraken noted that the miner revenue reached a near 4-month high of 70 million on September 7th, rising 27% a month after August 5th upgrade, as NFT activity in projects such as Pals, Loot, and Junkies like pushed priority fees higher. But a recent slump in the NFT sector, led by strong corrections in the number of its daily active users to negative 23%, trading volume negative 83%, and transaction count negative 31%, also pushed miner revenue down. Nonetheless, the amount of ETH held by miners surged to its highest level to date, prompting Kraken to deduce that they are accumulating and mining Ether tokens to become validators of on the upcoming Ethereum proof of stake chain, dubbed Ethereum 2.0. Users need to stake 32 ETH into Ethereum 2.0 smart contracts to become validators on its network. In return, they may earn up to 5% annual percentage rate. As of September 29th, ETH 2.0 has attracted 7.813 million ETH, worth 2.85 billion from 48,780 unique depositors, as per data provided by CryptoQuant. Related, Ethereum balance on crypto exchanges hit new lows as ETH price retakes 3K. Meanwhile, as more Ether tokens go out of the actively supplied due to staking and EIP 1155 activation, the prospect of holding ETH might appear profitable for miners due to classic supply and demand models. With ETH, so from Lark Davis, Crypto Lark with ETH EIP 1559. Ethereum supply will likely peak around 120 million, after which it will go down and down and down. Meanwhile, demand will be rising. Pretty sure that means the number will go up at an eventual rate. Ether was trading at 3,000 at the time of writing, up more than 300% year to date. The views, so these are views and opinions expressed by Cointelegraph, solely their own. All right, I have 5 more articles here. You've got Ethereum will replace Bitcoin as leading crypto network, claims Polygon co-founder. Up next. So, Ethereum will replace Bitcoin as the leading crypto network, claims Polygon co-founder. According to Polygon's co-founder Sandeep Nalwal, it is only a matter of time before Ethereum overtakes Bitcoin as the dominant layer 1 protocol.
Ethereum will replace Bitcoin as the leading crypto network, claims Polygon.
Sooner or later, Ethereum is going to outpace Bitcoin and then become the global, standard.
Sandeep Nalwal is the co-founder and CEO of Polygon, a multi-chain scaling solution aimed at improving the efficiency of the Ethereum blockchain. Polygon has been among the fastest growing DeFi protocols in 2021, and it now has the official backing of billionaire investor Mark Cuban. Despite increasing competition within the DeFi space, Sandeep is convinced there is no such a thing as an Ethereum killer.
It's still very, very early days for somebody to be said that, okay, they are going to kill Ethereum.
In this interview, Sandeep tells us his vision of DeFi's future and how Ethereum will eventually overtake Bitcoin as the leading cryptocurrency. Welcome to another exclusive Cointelegraph interview.
All right, well, you can watch that if you want on the recap articles on these things. Let's go over to this article. Sooner or later, ETH will outpace Bitcoin and become the global standard, said Polygon co-founder Sandeep Nalwal in an exclusive interview from Cointelegraph. So I will say this, look into the Bitcoin Lightning Network and the Liquid Network, because there's already layer 2 scaling, just like this Polygon is layer 2 scaling to Ethereum. That's all it is. But in a great sense, there's a closer knit to Bitcoin, which is completely makes sense, and I love it just as much as I love Polygon, to layer 2 scaling of Ethereum and things like that. So there's, or the Matic chain and whatever, but there's whatever they got going on over there. There's so much going on, like reading about different projects, different entities, different startups within blockchain. So I understand about the Polygon, I understand about the Matic presence is there. I haven't looked into their whole entire protocol, their documents and stuff like that. I will say that. So do your own research into those, most definitely, to understand how their network works, how it's interoperable with Ethereum, in a sense of layer 2 scaling. But look into Bitcoin Lightning Network, which is layer 2 scaling directly connected to Bitcoin and Lightning transactions of Satoshis, the lowest denominational amount of a Bitcoin. So you can send a Satoshi back and forth to each other, and that's the lowest denominational amount of a Bitcoin from 1 Bitcoin has 8 decimal precision, and that 8th decimal is 1 Satoshi, 0.0000000, and then 1 is the 1 Satoshi in Bitcoin language. And that has a monetary value on the markets in different currencies, pairing and competing currencies. So I typically don't think that Ethereum will. My personal take is that this isn't financial advice. You have to do your own research and do what you feel is safest for yourself. But for me, and my take and what I see happening in my involvement and communications is that there's a great network within gaming in the Bitcoin Liquid network and NFTs and smart contracts on the Lightning and the Liquid network, interoperable with Bitcoin Lightning transactions with Liquid network smart contract NFTs, and they already have the Explorer set up, and they're interoperable with games like Light Night and many other games arising, as well as games where play to earn, just like you do in certain games on apps. And in the Ethereum blockchain, you have play to earn on these great upcoming games that I even show on my gaming streams. And there's competition events on that in esports gaming within the Bitcoin Liquid network and Lightning network, and that has skins just like in Fortnite, just like in that are in Light Night. But that the difference is that if your Fortnite account gets deleted and your whole entire drive and memory is lost or something like that, your game is gone, or essentially, and all your skins are gone. Unless there's some recovery rate, but otherwise it's deleted. Whereas on the blockchain, with the Lightning network and the Liquid network NFTs and skins, I have, say, for example, a pair of Bitcoin glasses that's on my Light Night character, and different skins on my items, weapons, attachments that all look differently, just like in Fortnite, PUBG, Warzone, all the different games. But these ones, you just have to have your wallet backed up because it's always attached to a blockchain. So as long as you have the seed words stored in private and safe, or the privacy key to your wallet address stored in private and safe, and only viewable by you and backed up accordingly, you can always access your wallet and your skins once more in the game. So that's the power behind having your NFT smart contract assets that are game items attached to your Bitcoin Lightning and Liquid network wallet. There's already like ZBD wallet for Lightning network. There's already wallet of Satoshi, and I believe there's coming up with Liquid network wallet mobile. If it's not already there, I'll look into that. So my main point is, I don't necessarily think that we could say Ethereum's going to overtake Bitcoin. I think there's some great games being built on Ethereum directly, but that can be done, and those games can also be ported cross-chain easily right out of Ethereum into Bitcoin Lightning. And cross-chain interoperability. Nailwall believes that Ethereum will eventually become the ultimate settlement layer for the DeFi space. Polygon will play a major role in ensuring the long-term success of Ethereum through its scalability solution. Well, I mean, just think that on the Liquid network and the Lightning network that we could interoperable place tokens from Ethereum and DeFi spaces into the Bitcoin Lightning and Liquid network protocols as well. So native project tokens can cross-chain over into a layer 2 scaling of Bitcoin network for smart contracts, basically. Despite increasing competition from other layer 1 protocols such as Solana, Nailwall believes that it's still too early to talk about an Ethereum killer. The Ethereum chain, because of its fundamental security, the level of decentralization in the community, and the trust that it has created as a chain over time, it is just beyond the reach of any other chain, he claimed. According to the Polygon co-founder, Ethereum will eventually prove superior even to Bitcoin because it has a higher number of use cases. Nailwall believes that if Bitcoin doesn't expand its utility beyond the mere monetary system of function, it may not survive in the long term as a layer 1 protocol. It may take 10 years from now, but I don't see a world where multiple layer 1 protocols exist. So there's that. That's my take on that. But again, I believe in both networks equally. I just think that what's going on in the Lightning and Liquid network is really, really, really awesome. Very interesting. I'll spin this next article up here. So this is from Bloomberg. Apparently, monthly limit of free content about to expire. They must track an IP on here from Bloomberg of what you read, and then they want you to subscribe to read their articles at a paid rate. And Bloomberg is cool. They got good stuff on there. Cryptocurrencies. Crypto exchange pays $24 million in transaction fees for 100,000. This is by Justina Lee. So Bitfinex appears to have made a fat finger crypto trade. The two exchanges and transactions are closely linked. Bitfinex, one of crypto's world's most controversial exchanges, paid $23.7 million in transaction fees to deposit 100,000 on the blockchain in what appears to be a fat finger trade for the history books. Bitfinex was moving the amount on Tether, the stablecoin pegged to the dollar, to the decentralized exchange Diversify at 7:10 a.m. New York time Monday. Records on blockchain tracker Etherscan show. Anyone transacting on the Ethereum blockchain pays miners what is known as gas fees in exchange for incorporating their trades onto the digital ledger, an amount that can vary depending on supply and demand for computing power at any time. While erratic and pricey fees have been a common gripe in that world amid this year's decentralized finance boom, the $24 million price tag appeared to be a mistake. The Diversify called it erroneously high in a tweet. While fat finger errors have also been known to spark inexplicably sharp swings in traditional markets, they are uniquely problematic in the crypto world since blockchain transactions are supposedly irreversible. In transactions such as these, the fees are shouldered by third-party integrations with Bitfinex. A spokesperson for British Virgin Islands-based Bitfinex said in an email, "This has also been confirmed by Diversify in a recent statement. We look forward to Diversify's investigation and to their having this matter sorted on their side." Tether and Bitfinex share common owners and executives, while Diversify and Bitfinex are also closely linked. The three co-founders of Diversify worked at Bitfinex. The firms Thursday announced a link between them to enable cheap transfers of Tether tokens. No customer funds on Diversify are at risk, and this is an eternal issue for Diversify to resolve, it said in a tweet. Operations are unaffected. So at least they have that there. Tether and Bitfinex aren't strangers to controversy, with the exchange settling a probe with the New York Attorney General earlier this year, and executives behind the stablecoin facing a criminal investigation. Customer funds have been stolen or lost in the past. On Ethereum, the user fills in how much they want to pay in gas, usually depending on how large their trade is and how eager they are for the transaction to be completed soon. The block reported the fees earlier. Back in 2019, the firm behind Tether more than doubled the supply and circulation by a mistake due to a confusion over the token's decimals. How do you have a mistake due to confusion over your token decimals when it's your own firm? Fueling a plunge in Bitcoin. Yeah. Individuals also occasionally complain on social media about accidentally entering exorbitant gas fees. That's from Bloomberg. Spin up this next article here. Got 3 more articles here. I'm gonna close out the stream for the day. This is from writer for Cointelegraph, Helen Parts. Visa working on blockchain interoperability hub for crypto payments. Visa's new interoperability project is designed to serve as a network of blockchain networks. Global payments giant Visa has introduced a project that aims to be a universal adapter of blockchains that can connect multiple cryptocurrency stablecoins as well as central bank digital currencies, CBDC. According to an official announcement on Thursday, Visa's research team is working on a Universal Payment Channel (UPC) initiative, a blockchain interoperability hub connecting multiple blockchain networks and enabling transfers of digital assets from different protocols and wallets. Imagine splitting the check with your friends, and then everyone at the table is using a different type of money. Some using CBDC, like Sweden's e-krona, and others preferring a private stablecoin like USDC. Visa wrote, adding that such a tool may be a reality in the not-too-distant future with the UPC project. Developed by Visa's research and product teams, the UPC project is designed to establish dedicated payment channels between different blockchain networks, connecting CBDC networks between countries, as well as connecting CBDCs with private stablecoin networks. The Visa... Oh, I don't want to do that. Independent token service. Actually, I want to grab that link. Microsoft wins U.S. patent for Ledger Independent Token Service. I'll read that on the next news article. Sounds interesting. All right, let's go back into this. Imagine splitting a check. Oh, yeah. So developed by Visa's research and products team, the UPC project is designed to establish dedicated payment channels between different blockchain networks, connecting CBDC networks between countries, as well as connecting CBDCs with private stablecoin networks. The Visa research team originally began working on the UPC concept back in 2018, developing an interoperability framework that would run independently of the underlying blockchain mechanisms. Ultimately, the UPC solution aims to serve as a network of blockchain networks, adding value to multiple forms of money movement, whether they originate in the Visa network or beyond, the announcement reads. One of the world's largest payments companies, Visa, made a major move into the crypto industry in 2020, partnering with blockchain firm Circle to support the USD coin USDC stablecoin on certain credit cards. The company has since reaffirmed its commitment to crypto payments and fiat on-ramps, with a particular focus on stablecoin integrations. This is from Cointelegraph about Visa. And yeah, whether you're on YouTube, Facebook, Twitch, DLive TV, Trovo, wherever in the world you are, please do subscribe, turn on bell notifications here to Blockchain Tech and Finance News. With me, your host, KinToshi. I'm going to spin up this next article. And again, on the next news, I will be reading that article on the next one. So let's go ahead and go into these last two articles I've got here. And these are within the stock and technology sector, because I do crypto and I do blockchain and stock and finance in general, market trading and technology sector on these episodes. And all of these article links are on the description box below on the recaps on the YouTube side. So Kanye's, this is from Yahoo Finance from Brian Sozi, anchor editor at large. Kanye's latest hoodies can't seem to lift Gap's sinking stock. So Gap GPS, make sure I got everything good here. Yep. Gap GPS clearly thinks this fall will be the year of its classic hoodie being the coolest or warmest since sliced bread. The retailer announced its latest product drop from its partner Music icon Kanye West Wednesday. Perfect hoodies. The 100% double layer cotton hoodies in 6 different colors are reminiscent of the early 90s. Gap is hawking them for $90. A pop kids sizes go for $70 in June. A year after signing a deal with West for a new clothing line, Gap released the first product under the Yeezy brand, a $200 puffer coat called the Round Jacket. Gap's hoodie isn't a surprise. Our classic Gap hoodie is having a moment, so much so that we issued it in a vintage brown for pre-orders delivering this fall. And it's not just on TikTok. We've even seen elevated search levels across Google. 7 times more people search for the hoodie on gapinc.com in Q2 more than a year ago. Gap CEO Sonia Singhal told analysts on an earnings call in August. Shares of Gap rose by as much as 5% Wednesday after the latest product release, but the bump was brief. The company's stock slipped more than 3% Thursday. After the latest product release, but the bump was brief. The company's stock slipped more than 3% Thursday morning. Shares have lagged the broader market in the crypto quarter of the year, likely as a result of supply chain concerns gripping the retail industry. The stock is down 27% quarter to date. Being proud to show off a Gap logo on one's chest hasn't been the norm in about a decade, maybe longer, so it's understandable Singhal would mention it during the company's most recent call. Data shows we're attracting a younger fan base with our teen logo hoodie outpacing adult sizes by 4 times. I share this all for a reason. At Singhal, this is a brand that is resonating, and this is a brand that people care about and want to wear proudly across their chest. Luckily for Gap, it's seeing momentum with its cost-cutting efforts. See store closures and Old Navy as an interest in Gap hoodies may just be a near-term blip, with consumers continuing to embrace coziness during the pandemic. The retailer said second quarter comparable sales at Old Navy increased 18% compared to the second quarter of 2019 pre-pandemic. On the same basis, comparable sales at Gap rose 3% and Banana Republic fell 5%. Operating profit margins improved 190 basis points. Gap is scheduled to report third quarter results on November 24th. All right, so this is from Yahoo Finance about Kanye's latest hoodies aren't necessarily helping the Gap stock. I've got this last article to spin up here. And I'm going to close out the episode for the day. And this next one I found interesting as well. Yeah, if you're on the YouTube side, please do subscribe, turn on the bell notifications here to blockchain, tech, and finance news. All right. Google is redesigning search using AI technologies and new features. Google announced today it will be applying AI advancements, including a new technology called Multitask Unified Model MUM, to improve Google search. As the company's search on event, the company demonstrated new features, including those that leverage MUM to better connect web searchers to the content they're looking for, while also making web search feel more natural and intuitive. One of the features being launched is called Things to Know, which will focus on making it easier for people to understand new topics they're searching for. This feature understands how people typically explore various topics and then shows web searchers the aspects of the topic people are most likely to look at first. For example, Google explained if you were searching for acrylic painting, it may suggest things to know, like how to get started with painting step by step, or the different styles of acrylic painting, tips about acrylic painting, how to clean acrylic painting, and more. In this example, Google is able to identify over 350 different topics related to acrylic painting, it notes. This feature will launch in the coming months, but Google notes it will also be expanded in the future by using This future, this future will launch, but Google notes it will also be expanded in the future by using MUM to help web users unlock even deeper insights into the topic beyond what they may have looked for, like how to make acrylic paintings with household items. The company is also developing new ways to help users both refine and broaden their searches without having to start over a new query. To continue the acrylic painting example, Google may offer to connect you to information about specific painting techniques like puddle pouring or art classes you could take. You could then zoom into one of those other topics in order to see a visually rich page of search results and ideas from across the web, including articles, images, and more. These pages are meant to better compete with Pinterest. It seems as they are able to help people become inspired by searches, similar to how Pinterest image-heavy pinboard aims to turn people's visual inspiration into action, just like visiting a website or making an online purchase. Google says the pages will be useful for searches where users are looking for inspiration like Halloween decorating ideas or indoor vertical garden ideas and other ideas to try. This feature can be tried out today on mobile devices. Google is also upgrading video search. Already, the company uses AI to identify key moments inside a video. Now it will take things further with the launch of a new feature that will identify the topics in a video. Even if the topic isn't explicitly mentioned in the video, then provide links that allow users to dig deeper and learn more. That means when you're watching a YouTube video, MUM will be used to understand what the video is about and make suggestions. An example, a video about macaroni penguins may point users to a range of related videos like those that talk about how macaroni penguins find their family members and navigate predators. MUM can identify these terms to search for even if they are not explicitly said in the video. This feature will roll out in an initial version on the YouTube search in the weeks ahead and will be updated to include more visual enhancement in the coming months, says Google. This change could also help drive increased search traffic to Google by leveraging YouTube's sizable reach. Many Gen Z users already search for online content differently than older generation, studies have found. They tend to use multiple social media channels, have a mobile-first mindset, and are engaged in video content. Google study, for instance, found that 85% of Gen Z teenagers would use YouTube regularly to find content, while 80% said YouTube videos had successfully taught them something. Other data had demonstrated that Gen Z prefers to learn about new ideas and products through video as well, not text-native ads or other content formats. For Google, this sort of addition may be necessary because the shift to mobile is impacting its search dominance. Today, many mobile shopping searches today now start directly on Amazon. Plus, when iPhone users need to do something specific on their phone, they often turn to Siri, Spotlight, App Store, or a native app to get help. Google also today unveiled how it's using MUM technology to improve visual searches using Google Lens. Is that it? That's it. So I found that interesting. Scaling up on the Google side. The great Google. So that's all I have today. This was like an hour-long one. I usually keep these to like 15, 30 minutes or 45 minutes at best. Well, I had like my camera kind of going blurred in and out. Got to change that focus. Sometimes I got to do this and get that focus going. So if you're on the YouTube side, please do subscribe, turn on the bell notifications here to blockchain, tech, and finance news. On the YouTube side, I'll have all the source links to these news articles that I read today in the recap on the description for you to find. So other than that, have a great and kind, safe day. Cheers. Ciao. Peace be with you. Stay well, stay safe. See you on the next one.